This is going to be another one of those, what would retail concept traders do in this scenario compared to what would institutional and smart money concept traders would do. This all came about from one post that I dropped on Instagram, and I literally just said, why are retail concept traders up in their feelings regarding GU right now? And what I decided to do was, the person who dropped the thing that I was thinking about was going to get 1 month's free mentorship. I got about 100 plus comments, absolutely insane. I read every single one of the comments. No one actually said exactly what I was thinking, but some of you came close. So I'm going to go ahead and pick one person out of the many who came close. But I'm going to drop the winner randomly throughout the video, so make sure you watch the whole video to see who wins. And by the way, family, a lot of the comments that were dropped were all correct. There were some funny comments, but I was looking for one piece of information that would have swayed the whole thing. Stay tuned. Let's get into the video. We had a lot of people with really close responses, and we had people come and say, look, they're just jealous. And it just made me laugh a little bit, because really and truly I wanted a breakdown of what was going on. Man just came back and said they are just jealous. We had another comment say, money to money. Okay, it's just money to money. Once again, another comment, I didn't really know what was going on there. Money to money, you know, they run the money, okay, interesting. But your boy wanted a bit more of a breakdown. And then we had people say, retail thought market will proceed with the bearish move, but came back for liquidity. I needed a whole lot more to that. I needed more meat on the bone for that. Then we had market is trending down. Retailers are putting sell stops below the low for a breakout trade and got triggered, but price just suddenly hit their stops, liquidity, and go to the different direction. That was part of it. It wasn't exactly what I was seeing. It still made sense. Then we had market flow showing lower lows and lower highs and lower lows and lower highs. And also they created momentum to the downside. So all the FOMO traders jumped in a sell. Also, they spiked the low to trigger the sell stops. Then they rise nicely, a little beauty. So once again, I was similar to the other one. Not exactly what I'm looking for. It still makes sense. A lot of the responses I did get did make a whole lot of sense. Just letting you guys know. But I just wanted to see whether anyone saw what I saw. That was, once again, something that really made sense as well. And it was true. That is exactly what they did. Retail thought a W formation will be built until smart money traders use them for liquidity. Technically, that is true. You know, those stop losses that were above there were used for liquidity. And so, yeah, and I see that little W. I believe you're talking about this one here, W, that one here, right? So whenever they get like a little W, this is when they expect this place to hold, and, you know, they got used for liquidity. And the very last comment I'm going to read out, because price was overall bearish, when they saw the liquidity grab from the downside, they took that as a signal to continue selling, and so they placed sells. But price then made a huge bullish liquidity grab, and so their sell positions would have ran out or hit stop loss. The next thing is that some were in a sell position before the big move up. So because they assumed price was continuing down, they placed their stop loss on a trend line resistance or above a previous high, which was ran out by the upward liquidity grab. So once again, a lot more detail in that one. That was pretty good, but still wasn't exactly what I was looking at. Most of you guys are correct. Some of you guys, honestly, didn't really understand what was going on, but the majority of you guys are correct. So now when it comes to why retail concept traders were up in their feelings, why they were emotional, why they were sad at this point, why they may have been sad at this point, and this is by no means taking a dig at retail concept traders. Like I said, I love all my traders. I'm also looking at a specific concept that a lot of retail concept traders like to trade. So I've literally put my annotations on right now. You can see I've got my weak separators on. It's just there, okay? It's just there, so I'm not going to move it right now. But what would retail concept traders seeing right now? So they would have seen this very strong support zone. And so whenever price is tapping into that support zone, yes, they would have been looking to go long. If they broke beneath it, they'll be looking to go short. With simple support and resistance concept. So when traders kept on seeing price tap into this area down here, they would have jumped in for buys and they would have got played down here. So retail concept traders are already mad at this point anyway. Not only that, they also would have seen this head and shoulders pattern. So from this level here, they would have got that high, this low, the high, the low again, and they would have got another one right here. So this literally was what I was looking at. I wanted one of you guys to just drop, look, retail got a head and shoulders pattern. Now with this head and shoulders pattern, I know I've not drawn it out perfectly, but as you can see, look, that's the left shoulder, that's the head, and that's the right shoulder. What are they trying to see? What are they trained to do with this head and shoulders pattern? One of the main things that they are trained to do is that when price breaks out of the neckline of the head and shoulders, this is where they're either going to do breakout selling or they're going to wait for a retest of that neckline, and then they would want price to drop. And when it comes to stop loss, they're either going to put their stop loss above the zone if they're really aggressive, or above one of these highs. We're looking at this level down here now. I'm going to go ahead and mark up this level so you guys can see the exact level I'm looking at. I'm looking at all of this down here. This piece of price action here when price broke out the neckline. Because the moment price breaks out of the neckline, this is when their mindset changes bearish and try to sell or look for a selling opportunity. So I'm going to go down the time frame now to show you guys what happened over here. So now I'm in the 5-minute time frame. This is where they're looking to go short now. Some would have been selling from the breakout. Some would be looking for a retest. That's when some people get in, and some other people who are a bit more patient, they would wait for some kind of rejection candles before go lower. And here you can see you got a 15-minute candle rejection. I know we're in a 5-minute time frame, but the 3 sell candlesticks right now, that's a 15-minute time frame rejection. If price produces a 15-minute sell candle, that is a decent rejection. And they'll be looking to get short. If they're using the lower time frames, they're going to be putting a stop loss above a high, above this high, if they wanted to give their trade even more room. You also had other highs also. And I'm going to hit play now. I'm going to go up the time frame, at least to the 15-minute time frame, go up the time frame, and then I'm going to hit play to show you guys what actually happened with GBP USD. You guys probably seen most of it already, but I'm going to show you guys what actually happened with GU. There we go. We had this big push up that would have taken out stop losses. After the rejection was a 66 pip move. No retail concept trader is going to be having a 66 pip stop loss. This would have played you. This would have stopped out retail concept traders, the ones that entered in from the neckline. But don't forget, there was also liquidity, stop losses above these highs too, because some people enter from the right shoulder. When price started moving lower, they will move the stop loss into profit. They might be stopped out here, but look what happened here as well. What did they give you here? They started giving you break and retest entries. So that means every single person who got stopped out from this push up here, they would have had another opportunity to enter when price was doing these break and retest entries over here. So this is another break and retest entry, as you guys can see. They would have been thinking, okay, cool, I've been stopped out here, or I've closed out my position, or I've been stopped out in profit here. I want to look to jump in again because price is respecting the zone. This is another resistance zone, and I want to be looking to jump in from one of these break and retests of these support and resistance zones. What I'm trying to say is that there's more liquidity being generated above these highs. I'm not saying they would have jumped in at every single opportunity they had. I'm just saying, see it as money. More liquidity would have been generated above all these highs, and especially above this one, because if you're being extra safe, this is where you put it. And by all means, there will be stop losses up here too, but then this is a big stretch right now. That's about 80 pips. And now I'm going to show you guys what happened. Now I'm going to go up the time frame. I'm going to go to the 1 hour time frame to show you this real quick, because it is a lot easier. There we go. See, they took out this high and that high. Why? Because there was money up there. Like I said, there was liquidity up there. There was buy stops up there. You have to think about, where is the money in the markets? Where is the money being placed in the markets right now? The money is being placed above these highs. When they drop price lower, they activate all the sell stops. They dragged it back into the range. They stopped those folks out, and then they went forth to go and take out the buy stops above these highs. This is one of the things I was telling my mentees, to watch out for these highs. I would want to see them run these highs and then potentially look to drop back in, to drop into a discount. I forgot to mention, one of the reasons they trade above these highs is because if smart money are buying from this level down here, they need to offload their buy positions to other willing buyers. Now they've run out this low, where are the willing buyers? The willing buyers are above here, because at these highs there are willing participants who want to buy price. Why? Because when price breaks out of a level, there's going to be breakout buyers. They take that buy order, offload it to these people who are willing to buy. If they're willing to buy, that means there must be someone who's willing to sell. This is where smart money is selling off their buy orders that they've taken up, and they're offloading it to these willing participants who want to buy above these highs over here. They spend a little time up here, giving enough people the opportunity to become buyers whilst they are looking to get short. Where do you think price is going to go to the upside with this break above the high, retest of this level here, and then this confirmation candle back up? These two buy candles, that would have been another confirmation to go long. People would have jumped in with buys and they took it against them. Now I'm going to show you guys what institutional and smart money concept traders were seeing at the time. Okay, cool. So I'm going to leave all the annotations on right now, but I wanted to show you this real quick. So this very high right here that ran that liquidity to the downside, the moment it was violated, that showed that price wanted to trade back up. Highs were being protected along the way down. We've now violated a high. It means that now we can potentially be looking to target other highs. We know that there's going to be stop losses above every single one of these highs that for the break and retest. We know there's buy stops up here. We also know there's going to be buy stops above the right shoulder. This high and that high are pretty close together. The difference between them is roughly about 11 pips. So you know that they're not just going to stop here, they will want to continue to run these highs too. The difference between this high and the very high was roughly about 70 pips. And so this is why this was the agenda, to get above this high over here. Now, when it came to entry, you guys saw I entered roughly about 92-ish. So I entered roughly about 1.2492. So now I'm going to show you guys my entry. So from this high to this low, I was looking at price returning to this down close candle, which runs out this liquidity to the left. And specifically, I wanted it to return back to the body. Now I'm in a 1 minute time frame. I'm obviously refining my entry. This is when they trade down into the body down here. They trade into the body. They break above the high of this candlestick here. They break above the high of it with this wick up. They come back down to fill in the imbalance. This is why I enter to then take it to the upside. And I literally target. These highs I'm not too concerned about, not these ones. The buy stops above this high here and also here too. And that was a very, very juicy move. From 92, you can see literally that whole push up higher to get to this level was roughly about 100 pips, which was absolutely amazing. And now we're going to announce the winner of the 1 month free mentorship. And before I even announced the winners, there were some comments that were so similar, but I just had to go with the person who dropped it first. And although not one person mentioned a head and shoulders, you guys mentioned a triangle, you mentioned a trend line and everything else. And that's all good and that's still all correct. But I wanted someone just to mention the word head and shoulders. If you had just mentioned that, this would have been yours, but it's all good. I'm going to go with the first person to mention something that was, similar without the head and shoulders. That person was Trade MT4. They said price was in a range, and this means retail buy on support and sell on the resistance, but price went down and grabbed all the stop losses beneath the support, and this would have caused retailers to then panic sell, and some of them are breakout traders. Price then reversed and also took their stop losses as it rallied to the upside. Relative equal highs were formed, which price also ran through and grabbed all the stop losses. Trade MT4, you are the winner. Hit me up in the DMs and I'll send you the links to go ahead and get started. And by the way, this doesn't mean that any of you guys are wrong. There's different ways to see the market. I just wanted someone to mention the head and shoulders, okay? If you just mentioned that, it would have been yours. I was just happy to know that I've got tons of followers who think about liquidity, stop runs, where the money is in the market, where they are in drawdown, and where there are willing participants who want to buy or sell.